And a warm welcome, one and all. We're going to go to the Traders Clinic in my Discord on the Scruffy Trader. And it's the section called Ask Scruff, where the guys can ask me pretty much what they want, and I'll put my spin on it. So let's flick this over and have a quick look at it for you. So this one's for Rain. It's a little salute to you. And it's about prop funds. And essentially, how do you approach the position sizing and finding the optimum way to pass them? Now, there's 101 different prop funds. I'm going to use the one that is dear to my heart, which is the Fivers. It's the only prop fund that I use or consider. I trust them and everything is fine. And if you're unaware of what this is our Discord. The guys talk to themselves in and amongst this lot, where they'll drop in, they'll have a bit of a chat, a bit of a laugh. Bulls and Bears are here where they can talk their trades, which they're in it this morning. Small success, and as Rain was alluding to, this is the prop hood. And one thing that I was really pleased over this week is the amount of them that have been passed. Even myself, I passed another one for them. They've done exceptionally well. So how do I approach this? Well, first of all, you need to understand what a prop fund is. So let me just flick up what this is. Now, prop fund is where you'll pay a fee to get funding, you pass an evaluation, and then you have a profit split. It's very simple. They put the money in, you put the work in, and you split it between you. And depending on the company, depends on what kind of profit splits you get. Now, if you're going to look to pass one, you need to break it down into stages. Okay? So, for argument's sake, this has one step. So, you have one set of evaluations, and then you're funded, and then you go about your journey. The high stakes, you've got to do 2 evaluations. So it's like one step, yeah, then they give you the next part. You pass that, then you get you funded. And then the boot camp is 3. 1, 2, 3. So depends on which way you look at it. And then as you can see, the costs vary. These are in dollars, but you can pay with your own local currency. And if you want to try it, there's links for them in the comments in the description, or just visit my website, thescruffytrader.com. So let's have a little look and see what this is all about. So first of all, you've got to find out what your parameters are. So let's just take this for example. So your valuation is 5,000, but that's buying power. Remember that word, buying power, okay? Because if you hit 6%, you will be stopped out. You will lose that account. Okay. So the 6% of the 5,000 is actually your account. And you need to achieve 10% of that balance. Okay. With me so far? What that means is you need to have a target of 500. And if you lose 6%, it's gone. Now, people talk about the leverage side quite a bit. And they say, oh, the leverage is rubbish at 1 in 30. It's not, because the actual size of the account is the stop out level. So you've got 1 in 30 of 5,000 and the 5,000 itself as buying power. That is massive. It's a big, big power. All right. Now, what they do here, which is their point of difference, the profit split is up to 100%. So if you make 100, you get 100 if you're at that level. But it's tiered as you go up through the ranks. There's no time limits on it, so the pass time is up to yourself. And then you also get a bonus of a credit that is put onto your account, that if you want to take another one, you can use that credit against the fund. Now, as you come down, it'll tell you all the different rules. This particular fund, you just trade the way you are. They do have a 3% stop out rule. It means you can't lose more than 3% in a day. And if you do, they'll stop your trades, close them out, and then at least you can start again the next day. And then here you go, and there's your evaluations and what the payouts are. So as you move up through the ranks, sort of on this one, you would start here. To get up to top tier takes 10 steps. But once you get into levels 5 and 6, it starts becoming really good. In fact, the money could probably outperform your job. But on the run up, you're still getting paid incredibly well. All right, so you know kind of what the parameters are. So what I do is this. I track them on journals. I love my journal. So the first thing you would put on that one is, well, it's 5,000. So it'll tell you what the balance is, but it'll start working out what you've got to play with. So if you just put in 6% there you go. It's actually telling you exactly what your drawdown is and what the true balance is. So when you come on this side, yeah, this will keep track of the account itself, but it'll also keep telling you what your baseline is and how much you can't lose. So in this case, you can't lose 300 quid. So that's what I'll be basing my position sizes on. And as you can see, it's dropped down there. It's telling me it would be 30p. If it was a super duper trade, I could maybe push it out to 60p and I'd be fine. And then if I want to put it in my compounder, just drop that in there, and it tells me how much I can edge it up each time. These journals are outstanding. They control everything you do. So I plan these out constantly. Didn't plan this because my breakfast has arrived. Fantastic. Thank you very much, my wonderful wife. But these, they look daunting, but they're not. So you put your rules in here, just type a few in. This will control your sort of position sizes and what the account is standing. This will control your target. But what I've done to make it easier for you, Rain, is I've done this. So put in what it is that you need. Now in this case, you would need 500, and you would just drop in there what it is. So you are looking to pass. Okay, so turn that yellow, I think. Just knocked it up this morning for you. Right? So you're looking to pass the prop. Okay, how big is the account size? Well, you've just been told you've only got 300 to use. So it's telling you that it's 30p as your maximum size. You can put in here what your true size is. Now that'll be based off your journals, 20p. So you might be comfortable at 20p. Now I've done a formula here that'll work out how many days it'll take to pass. So if you put in today's date, which is the 23rd of December, because we're getting ready to break up for Christmas, you can put your end date in when you want this passed. You might think, do you know something? I'm going to take my time. I'm going to do £100 a month or £150 a month, whatever you want, and then project it forward. And you might say, right, I want this done by 1st of April. All right, so if you put in here, 1st of April 25, it'll tell you how many days it is, but it'll also tell you how many working days it is based on Monday to Friday. It's done a formula that works that out for you. Now here you can put in how many trades a day do I normally take. Do I take 2 trades? Do I take 10 trades? Whatever, but let's just say you take 3 trades a day. What's your average pip count? Now you might only win about 7 pips per trade. So that's 7 pips a trade. Okay. Now what it's telling you is what the average win is, and it'll tell you here. I'll tell you what we'll do. We'll just we'll format that into days. So round it up. That's going to take 119 days if you were at 20p to pass. Oh, well, you've got 2 choices here. You either up your position size, and as you see, it comes down, but it's still going to take you longer, but it's you're maxed out. So therefore that date is wrong. It means you've set your date a little bit too ambitious, because these shouldn't change. You should know roughly how many trades a day you take, and you should know roughly how much you win per trade if you fill in your journals in. And it stops you over trading, helps you plan. So really what you want to be doing is saying, well, what about if I did it till then? Excellent. Well, now if you max out, do your 3 trades at 7 pips. It's going to take you 79 days. This is good. It's planned out. You know exactly what your criteria is. And when that gets bigger, that gets easier. Now, you might think, okay, well, I'm going to go back to my 120. Well, because I'm comfortable at playing at 20. Right, okay. Well, I can't do it. So, what do? I increase my date out. I still can't do it. Okay. Because it's still more. So we go 1st to the 7th, 25. There we are. 119 days. So what you're looking for is that to go green. What this has done in a very simplistic way is worked out the length of time that you're going to take to do this based on the number of trades you take a day and the pip count you take a day, and then you're adding in your position size based on your account size. And as long as you start putting these elements together, you can almost project how long it's going to take you to do this, because one of the biggest issues of this industry is people try to run before they can walk. And certainly with a prop challenge, if it's got a small drawdown, in this case £300, and you're looking to gain 5, that means you've got to double that. Try not to do this in a week. Push it out to 3 or 4 months and break it down to a small number, and then just walk gradually to it. Now, once you're funded, keep walking. Don't try and swing at the fences. And what you'll find is your steps get stronger and better each time, which means your profits get stronger and better each time. We're doing an exercise this year, starting January, when I come back off my holidays, where we're taking a small account and we're going to build it over 12 months. So we're not looking to build it in a day. It'll be slow, steady steps, but at the end of the year, it'll be enough to pay for a holiday. And the principle is exactly the same as what we're looking at here. So I hope that helps you, Rain. Genuinely do. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.